To fully understand the business, you need to know the language of numbers. In our case, to understand the financial statements of companies. The financial statements consist of three parts: report on financial results, balance sheet, cash flow. We'll start to analyze the main points of the report on financial results using the example of Apple, using the website The Wall Street Journal, WSJ.com. Revenue. The income that the company received from entrepreneurial activity is calculated before deducting any expenses. Cost of goods sold, COGS, including D&A is the cost of goods sold, which refers to the direct costs associated with the production of goods. This amount includes the cost of materials used to create the goods, as well as direct labor costs used to produce the goods. In this case, depreciation is also taken into account. Gross income is the difference between revenue and the cost of goods sold. SG&A expenses are general, commercial, and administrative expenses. This includes expenses not directly related to the manufacture of the product or the provision of services. That is, SG&A expense includes the costs of selling and shipping products or services, in addition to the costs of managing the company. In addition, this includes rent, utilities, and consumables that are not part of production. SG&A expense includes almost everything that is not included in the cost of goods sold. EBIT is net profit before tax and interest on debts. But this line should contain operating income. It is not known why the editors decided to write EBIT here, because the indicated value corresponds to operating profit. Okay, let's imagine that this line shows the operating profit, which in turn means the profit received from the main activities of the company. Her calculation is to subtract from gross income SG&A expense interest expense, the cost of paying interest on the debts of the company. Pre-tax income, profit before tax. To get its value, add the amount, non-operating interest income plus interest expense, to the operating income, and the non-operating income expense value. Income tax, the amount of tax paid. Net income, EBITDA is profit before tax, interest expense and depreciation,